Hello everyone, welcome back to the RationalInvestor.co's daily brief. Looks like we got a nice full lounge of participants and hello everyone. Yeah, the YouTube video's live. Excellent, right on cue. Way to go to YouTube. Anyway, nice to see everybody back. Another exciting day in the market. Actually, I'm getting the kind of feeling, it was interesting. I woke up this morning and felt almost like there was like a dead calm in price. It's a little bit bothersome. You know, guys like John Bollinger, they built volatility measures, Bollinger Bands. You've probably heard of that before. And usually when the bands squeeze together, volatility is coming out of the market, kind of like what we're seeing right now. It sort of pretends for the next move. Something's about to happen. So in a weird sort of way, especially if you're playing from a position of strength where you have a lot of money sitting in, powder, waiting to pull the trigger. You're looking for ideas. You're looking for direction. Sometimes we get in these markets where, maybe it's the best thing just to keep your, cool your jets. Especially when after we go through those crazy face ripped ups. And I know a lot of new people to the school, a lot of new people to the site, just general site members, haven't been through these kind of markets before. And to a certain degree, you're almost like expecting, this is par for the course. But, what you saw, that sort of orgy in Ethereum prices there in the spring, that's not sustainable. It's not normal. And we're going through the very slow, painful, ugly process of cleaning all of that up. I don't mind the idea of taking little shots along the way, long shots, short shots, but this isn't the type of market to get overly complacent in. Recently, I take setups like bots especially, and some of them have their stop to break even levels hit, and so I just, got to get out. As well, yesterday I was even suggesting to people, oh, hey, thanks, Casey. You're so smart. Way to go. And glad I got you guys here in the lounge, keeping me honest. I would have totally forgot about that. Thank you, Casey. Is that any better? Hopefully that has had enough time to kick in there. But anyway, the point here is let's play our cards close to their chest. If you're going to take trades, for God's sakes, if you have, if you're going to take bots and stop to break evens, are hit, stop to trails are hit. I don't want to hear that you're losing money on those trades. That doesn't make any sense. If you have to just take partial profits, well, profit is a profit is a profit in this game. I noticed with the Litecoin, for example, that's sort of our long proxy. I do notice some other proxies in the market are breaking down, looking very heavy. And so, if that move is done, well, then it's done, right? You just take the profit and run. So I'm still waiting for structure to develop there. Well, I guess we'll look at that chart in a bit. But the cautionary word is, and I noticed in a few tutorials, some of the newer people to the program were enamored with the bots and hitting targets, and during, face rip rally up mood. And that's understandable because it's trend continuation trade. As soon as that market state changes and we go into either consolidation or, heaven forbid, down, I don't think we're in a down market state right now. I think we're still in consolidation. You're going to find that bots aren't hitting their targets. It just makes sense because the market isn't trending anymore. And I did see some new people that were really enamored, not quite totally up to speed with a trader's life and having to be relatively quick on the trigger, are struggling a little bit in this market state. And if anything, my advice to you, and it might be a tough pill to swallow, is until you really get to know the person that you are, the trader that you are, and you're building and working with a trading plan, and subconsciously you bought into the process, it might be a good idea just to put your wallet back in your pocket and do some serious paper trading and build up a nice log of a good, dozen or so setups that you've taken, and you watch step by step by step how they play out. And this should be a very good educational experience for a lot of new people. Like if you're really serious, if you really want to be a trader for the rest of your life, or you know, want to actually make a profession of this, you got to understand it's not it's not the bubbles and you know and bubble gum and happy orgy times that we sort of saw there a month or so ago. That's not normal market state. If anything, what we're going through right now is more normal market state. A lot of back and forth, and you know, this is where all this stuff about working with trading plans and trading setups and stuff really comes in. And of course, you know, I can't talk enough about risk management. So that's probably Brian's sort of spiel of the morning. You know, what's really interesting I find in this current market state is that fundamental drivers seem to be pushing price. So if anything, you know, we did notice that there are some, you know, there's some fundamental hype stories going on, and we go and look at those charts and we can see W's coming in and stuff. So if anything, this is a really, really good example of really hunt for those fundamental reasons why a story might be moving. I also saw two, well, a couple stories we'll get to. Okay, so broader market, I always like to start off just a quick boo of what's going on, sort of bigger picture. Stuart was telling me that it was still sinking, so we don't have the current altcoin data on here just as of yet, but that was the last time I updated this, and that was an hour or two ago, so it might be updated by now. Let's see. Do we have new data? No, we're still working off of the second. So the that guy's on the up to date. Hey, there's our little trade. So it looks like things are getting updated slowly through the day. That's what Stuart was telling me. But I do see some of this data is a little bit old. So keep in mind, we're still working on building this out. And Stuart is trying to capture that Trex data, and that's the big objective in the short term. I suppose broader market, you know, you can see that the breadth of the market has been sort of sanguine for a while now. It might even actually be ticking up. The medium term is now sloping pretty heavily to the downside. Usually when we see the medium term sloping heavily to the downside, we actually get an uptick in the short term. If we look at the sort of technical health of the S&P 500, you can see it's not overly happy right now. And it was interesting, we were noting, I think in the lounge yesterday, it might have been in the daily brief, I can't remember, but we were looking at the Dow, the S&P, and the NASDAQ, and you can see there's a real disconnect. One, you know, new economy is going down, old economy is going up, and as a result, the S&P just sort of sits there and does nothing. I think I was looking at the data this morning, and I saw that it was the exact opposite this morning. Dow was down, NASDAQ was up, S&P was flat. So I think we're going through a lot of sort of this churning, but the interesting thing about that is that this might actually be setting the stage for that. And usually July, August is relatively happy. I don't hear any sort of major, you know, economic crises going on in the world. If anything, what I'm hearing is just more talk of the Fed governors wanting to raise short-term interest rates, which is in itself actually okay, because what it means, I mean, they wouldn't be talking that way if the economy wasn't relatively strong. So on balance, that's not the worst thing for us to be thinking about. And I think we also talked about the yield curve recently. I don't know whether I did it in a daily brief or not, but you know, as soon as the yield curve inverts, that's when we know there's going to be trouble. And I don't see any yield curve inversion here anytime soon. So, you know, January barometer had suggested we were going to go sideways and then grind our way higher. And that sort of looks like what's happening here. I was actually really interested, you know, we've been talking about energy for a while, and we thought there was a bit of a sort of risk on play going back on. And I got the funny feeling through the holiday weekend that there was some real shenanigans going on. We kind of made that flip comment that maybe the NASDAQ is moving all the tech stocks over to the blockchain, sort of jokingly. But kind of serious too. It wouldn't surprise me if those kind of things are actually happening, but I don't think they're going to tell the public until after the event. But I do see right out of the gate, basically everybody's back from the holiday weekend. And they, in essence, crude here tried to accept back into value and just got bitch slapped right out of there. Get your butt out of there. And I also noticed too, and I thought this was really interesting. I was watching this through the night. I think gold is trying to bottom here, especially if we see that gold, the oil now has run out of gas. And I thought this was fascinating because, this is, if anything, a hallmark of commodities traders. We're looking at a lower time frame chart here, and we see that they did can everybody see little Sebastian's little FU move right here? It just literally took the market down a couple ticks lower than that low and then just jackknifed it right back up. And in a weird sort of way, that almost told you what they were going to do again. I had sort of wanted to keep an eye on this 78.6 coming into this session, but you can see that they basically just did a big FU down here just to clean out any weak hands. And really, I think their intention was to try and put a bottom in here. And then I noticed this morning right on the pit open, right, and this is what do they call this? It's the Forex vehicle. I'm not even sure if you call it a CFD or not, but it's sort of their index that they use on these Forex platforms. And what was really interesting is, if I'm not mistaken, they cleaned up the chart. When I woke up this morning, this candle was just like all the way on the floor. And Thomas, is that our bear, Thomas? I see you there, but I'm not sure if that's my Thomas or a different Thomas. Right, there he is. I've been thinking about you seriously here, man. I think that they're trying to put a bottom here in the gold market. I've been taking my nibbles here on the gold BTC proxy, and we got about 5 G's into that now. But I don't know, everything smells to me, and this chart here last night, this candle, it was just an absolute mess. And I think they just sort of designed, and especially through the holiday weekend, this to me almost seemed just like absolutely perfect textbook setup here. So nice FU, clean out the lows, holiday weekend, who's around? None of the professionals are around. And then notice right into the New York Open, they just politely bring it right back down into this tail and put in this cute little inside bar reversal. That when I saw that this morning, I was just like, damn, I want to go buy some gold. I didn't take the trade because I don't have a day trading plan working right now with the school. I'll be honest with you guys, with the school and with these daily briefs and stuff, I just don't have enough time to day trade. And frankly, that's going to be one of my big objectives in the new year, is I want to get back to actually day trading. But that was an awfully cute little setup there, right through the New York kill zone this morning. And you can see they almost have come up to the 2-to-1. They're sort of playing with it right now, but long and short of it, I think being buyers through that New York kill zone, it was almost like they brought the price down and just laid it out on a silver platter for the traders. Here you go, guys. First thing back from the American, let's all be in love with America Day. Here's a nice, gold-plated trade for you. It just almost seemed too perfect. Anyway, there's a cool little anecdote. I don't know. Can you guys see this? Yeah, some of you guys have been working with me long enough. Maybe others who haven't been working with me long enough. Can you see why I would be interested down here? Does it make sense? I hope it does. All right. So kind of a fun tangent, talking a little bit about the gold there this morning. And if we look at the gold on the on our sort of overview chart here, I did notice that we're coming up right against this key low. My hunch is there's a trade in here. Whether this low is actually gonna hold in earnest, I don't know. I could see a cute little day trade. Is the trend up? No, clearly not. We are well below value. If anything, my hunch is if there is going to be any sort of bounce here, we probably run into 1240 area here on this one contract, right? GC1. I think that's the August contract, but I'm not positive. And you can see the moving average resistance in previous lows. So if there was going to be a rally, I think it's up there, and that kind of makes sense because oil. I actually think oil needs to bottom here. I still think oil needs to tag this 42 AB equals CD harmonic. And I think this dead cat bounce, if anything, was to get people in on the long side. They're now going to backfill this. And I wouldn't even be surprised if they have to go down, do a nice little FU Sebastian setup to set up the actual trade off the lows here. So that'll give gold some time to clean itself up here. Interesting to see, our other sort of risk-off proxy, the Japanese yen, looking very heavy here. For us to get back bullish again, man, we really need to see some cleanup here. My hunch is we're sort of stuck in a trading range here, top of the range, bottom of the range. You can see we're coming into the bottom of value now. So, maybe we get some serious range expansion to the downside. I don't think so, though. Our bonds, I noticed on the algo, and probably something for us to pay attention, you see on the short-term basis, the bonds are at minus 100%. And you remember what we said, if we ever see these things at these kind of extremes, we should probably be looking for some sort of pivot. Right, there's the bonds. Interesting how the indexes are all bearish too here. That seems a bit odd. Something's not right about that. And of course, this is this crazy fear cycle peak. We are seeing the craziest relationships out here. Intermarket analysis relationships are just all over the map right now. So there's our bonds. They've caught a little bit of an uptick here today. We got this nasty M working. You can see Willie's in the process of cleaning himself up. We now have major moving average resistance to the upside. Yeah, I think they maybe got a little, all of them went just super bear over the short term. Maybe a little too far too fast, maybe come back to the pocket. You can see the cleanup process underway. But nonetheless, there's some problems with the bond market. And interesting, we were talking about, risk off, coming off. I wonder whether the NASDAQ is done its little funny business here. Keep in mind, we're coming into second quarter earnings season, right? The first week or so of July, that's usually where we see the pivot. So they put in this harmonic, nice trade, big dump, back down almost into reload zones. Maybe they're setting up a little FU over the coming week here. Can everybody see the bullish divergence in MACD trying to form here? So we could see the smatterings, right? We'll keep an eye on it. Nothing, certain yet. But let's keep an eye on, and really I might argue, and I've been saying this a while, I think Bitcoin to a certain degree is a bit of a tech proxy in the market nowadays. I'm looking for Bitcoin to move up here over the next maybe couple weeks. And maybe, tech stock rallying into their earnings season kind of idea. Maybe that's fuel for that fire. I don't know. So nonetheless, there was a cute little harmonic that fired. I don't know whether that trade's complete. It looks pretty close. But here is reload zones. Remember we talked about this gap down here. So could there be some shenanigans here through this week? Sure. But understand that we're coming into a second quarter earnings season. And once that kicks off, then a lot of the Fed talk and, geopolitical. I noticed that a lot of the headlines right now are all talking about, Russia again and all that kind of stuff, when really that has not very little to do with corporate earnings. So if anything, something like the NASDAQ, I might be thinking about, if we do rally up into this area and start failing again, then we're going to start thinking about shorts again. But for now, if anything, I think maybe there's some swimming around to do down here to set up that counter trend rally into sort of, August period. Usually the market's pretty happy into August, but we'll see. Only time will tell, as they say. And then, like we said, we look at old economy. That was new economy. If we look at old economy doesn't look too bad right now. This is actually the whole shooting match together. So actually, why don't we look at old economy, Dow stocks, right? The yummies. See, old economy doesn't look too bad. And really, it's just a hop, skip, and a jump away from new highs. Moving averages are all still very positive, maybe a little far apart for our liking. You can see the momentum divergences starting to build, though, here. Wow. So you know that at some point, this damn thing's going to have to correct. You can see it coming. And what's interesting is as they push the market to new high, you can also see the OBV divergence building, too. I don't think these have been overly confirmed yet. We had a little confirmed div right here, which sort of, suggested pause through all this mess. And again, sort of as we said, January barometer looking for that push up into August, maybe. And you know what might be interesting is this might even push in through September. And then, of course, our big cycle pivot. And the interesting thing, too, is you can actually see down the road exactly where they're going to bring this market back to. See that? That is invaluable information. I mean, if any of you are, investing for retirement, all that kind of crazy talk, right? There's your order level right there. You don't buy the market here. You just go and plunk your order to buy the Dow right there. Isn't that incredible? I mean, it's so as plain as day. And everything that I talk about in the course, wicks and tails like to be eaten, gaps, blah, blah. Look how it's right up against the POC. I mean, the irony of it all is the market's even telling you that that's where everybody's long. I don't know. Can any of you see that? Does that mean anything to any of you? Like, shut up and get on with Bitcoin, damn it. All right. Speaking of which, so let's get on with Bitcoin. Actually, I did a really cool chart I posted in the lounge this morning. This is Bitcoin from last year, around this time of year, and this is Bitcoin from this year, around this time of year. I look a little bit familiar. Does that look familiar to anybody? And that's the irony of it. How many of you guys were even in well, yeah, you may have been in crypto through the time period, but there aren't that many of you here in the lounge that were working with me this time last year. I think Thomas, of course, he and I have joined at the hip. Kevin joined us in the winter. Joby, my right-hand man. Jeremy, my right-hand man. Greg, how long have we been working together? A full year? I don't know. And then, of course, Benjamin. I can't even do one of these daily briefs without you. Okay, going and ninjaing all right, I'm sorry, I forgot that we're recording and people are watching on YouTube and they'll be watching this later. I started going off on a nostalgic tangent there. Sorry, guys. Okay, so the point here is, they often say if you don't learn from history, you're doomed to repeat it. And in a weird sort of way, I often see this. And really what I'm going to be watching for, remember I had said at the beginning of the module, can you see how volatile this is? Just back and forth, back and forth. But you notice that things really calmed down and went quiet through this period here, right? Have you ever heard the expression, the calm before the storm? Right? So I get the feeling that this is what we have got to sort of go through here. You can kind of see there's the big initial move, habush, right? There's the counter trend rally, kabosh. There's the kickback, kaboosh, right? There's the dead cat bounce, snabosh. And now I get the feeling we kind of have to do a, all right, let's just grind kind of thing. So I'm thinking this kind of thinking going forward for the next little while. If anything, what it means, hopefully, for us Bitcoiners, right, is maybe we and I, like I said, I kind of felt that in the room this morning, even past couple days. I noticed, and keep in mind, all the market is it's an expression of the collective of all of you guys. That's all the market is. And what's cool is that we got a pretty diverse group here. We got like over 300-400 members now. And, I got like 60, 70 students that I'm working with. So I get a really great just sort of cross section of what society is thinking and what society is feeling just from you guys. And I can feel the sentiment change. Remember we did this chart here, and we talked about. Do you remember everybody and their brother was just rah Bitcoin? Where did all those people go? Well, a shitload of Bitcoins. Where is that guy now? You know, that's weeks ago. That's now 1, 2, 3, 4, 5. So that's 6 weeks ago, a month and a half. Isn't that incredible how time flies? And then what was interesting was following that, I saw actual one gentleman in the lounge was like, on this event was just like, oh boy, you know, I don't think I've had enough of this. So it was really interesting to watch that we've sort of gotten rid of a lot of the fluff in the market. And that's what markets have to do. They can't go through this face rip period indefinitely. It just doesn't last. And if anything, for a lot of you, you know, especially the people that just started the level 1 program, this was a tough pill for you to swallow. Because I'm sure most of you assumed that Bitcoin was going to be about $5,000, $10,000 by now, or Ethereum was going to be worth more than Bitcoin by now. And what we've actually had to go through was just, you know what, let's all cool our jets. And now let's consolidate a little bit here. And if anything, you know, I actually have to be subtly impressed with Bitcoin and the how do we say this? Its disposition. I don't know whether that's the right word or not. But it's you know, every asset goes through its different phases of its life, and the way that it acts as it goes through phases is a big tell about sort of where it's going over the long term. You know, when I first started getting into this space, keep in mind, right, this is only a week high. Next week, 2 weeks later, 2 weeks and 3 weeks after the top, and this thing's already corrected back down to the 61.8. This is a hallmark of an insanely volatile asset that's really immature. The fact that we've rallied up as hard as we have and the consolidation has been so tight leads me to believe that this thing's a lot stronger than what people actually give it credit for. It's hung in there very well. I do think, though, you know, through the fundamental event in August, I just find it incredibly coincidental, right? That all this fundamental, and I also saw too, somebody, and I don't know whether it was in the lounge or I saw it on Twitter, but somebody posted that there's actually the dates that we need to be paying attention to actually start triggering around the middle of the month here. Has anybody seen that? Somebody, I don't know whether it was on Twitter or whether it was in the lounge, but somebody posted that I think on the 16th there's some sort of big date, and then on the 19th. So if somebody can find that tweet or whatever that post was by that person, not a bad idea to throw it into the lounge if you wouldn't mind. And really that kind of corresponds with this kind of thesis here. We should be looking for the sort of rollover, and then it sucks, guys, but I think we have to be prepared for this to happen. Somebody asked me this morning, Brian, are you going to change your bids on your Tether? And no, I'm just going to leave these working here. And should that scenario play out, these markets should tank into my stink bids. It sucks. I mean, we want to just be in a bull market and the market just always go up. But if you're going to ask me what I'm thinking needs to happen through the early August event, I actually think that this is a remarkable buying opportunity. The people that, you know, and actually there was one gentleman, I was actually very impressed with him. He said after some careful analysis, he figured that the venture capital market bottoms in October, November, December. And he would like to invest in names, and so he's decided that he's going to just put his wallet on his hip, and he's going to come back in October, November, December, and start shopping in the altcoin market. Frankly speaking, I gotta be impressed with a guy like that, because he's built a plan, And now the question ultimately is he going to stick to the plan? If we find out 2 weeks from now he's in there buying Ethereum on margin, we'll know, oh, he didn't stick to his plan. But I actually commend him, because this is very difficult for a lot of people to do. And that is to have the patience and discipline, if the market isn't trading at your levels, to just simply not buy. And, you know, that probably is a good dovetail to this bad boy here. I actually think that the market right now is being driven more by this story than by Bitcoin. And the crazy flood of these ICOs, which just in essence is just massive supply. I mean, literally the supply, the market cap, you will, of crypto is exploding because of all these ICOs, right? Just more and more money is generated going into these ICOs. It's kind of a weird way that this space is building out. I've seen this year after year after year. The irony of it all is most of these ICOs, they come to market, and within the first 6-8 months, they land flat on their faces. And then through the seasonal period, when things are sort of bottoming, guess who's in there going and buying? It's almost cliche, really. It gets a little cliche after a while. I don't know. Are you guys still with me? Have I put you guys all to sleep? I don't know. Is anybody still here? Yes, you're asleep, Kevin? All right. So the point of the matter here is, and, you know, I can see veteran traders, guys like Nico, that are in the lounge popping in, just saying, well, you know, I probably shorted against the top here, and really the shorts are just working away and my setup's working away, so just leave it alone. I don't know how bad this gets. You know, the interesting thing is Nico's over in Europe, so I think he's trading this versus the euro. Anyway, you shake it. This, if I looked at this asset and somebody said, hey, Brian, what do you think? Should I go and buy some Ethereum over there in Europe? I would just be like, maybe not, guys. I mean, hopefully you see lots and lots of reasons for us to have pause here. I was a little reluctant to actually get aggressive on the short side, even though there's a cute little M here. I was a little reluctant to join this trade because I'm not overly impressed with trade location. Having said that, could I see this market work its way back down here? Sure. Honestly, there's no reason why that can't happen. And at the same time, you know, let's watch how this low acts right here. If this is the AB equals CD, then, you know, that's what's dominating. But if she can hold these lows and get back up, then maybe this AB equals CD works. I'm not, you know, if I was a bet man, I don't think I'd be betting on that. You know, for people that like to check out the various different setups that we have on the site, this is what we call a DAVO, where you get a nice M in the in the volume momentum indicator. And you get an M in the price momentum oscillator. It's not the prettiest DAVO, but nonetheless, hopefully everybody can see that those are downward pointing momentum indicators. And then also you have the nice M in price. So put it all together, doesn't surprise me one bit. Price are written in US dollars. Not quite sure what you mean by that, T-Bab. This is ETH-EUR. Oh, I suppose that should be, what's the sign for the euro? Mr. Stickler. I don't even know whether I have that on the keyboard. Is there a sign for the euros in the keyboard? I don't see it. I don't know. What is the sign for a euro? So we'll put that as just 100. Because I don't even know what the is there a little, anyway, we're getting off topic. Long and short of it here, this thing's looking heavy. Hey, there you go. Thank you, Benjamin. I'll copy that. Benjamin, to the rescue again. This guy's such a man. You the man. All right, so there you go. So forever asked that, there you go. Merry Christmas. Who was that? T-Bab. Indian Brave. Oh, that's interesting. Eh? All right. So Justin is trying to talk to me. Bitfinex hack? I don't know what Justin's talking about. Maybe that was last year. Is that what you mean? Anyway, okay, enough is enough. Long and short of it here, ETH looking heavy, and indicators looking heavy too. And I was sort of posting out on the net and stuff like that. If we're going to be watching any story, ironically enough, I don't think it's Bitcoin right now. I think if there's going to be fireworks, if there's going to be problems in crypto, it's coming out of here. That's just my feeling. And of course, you know what I think about opinions. Trade your setups. Like I said, nice little M there. Nice little M's. If you wanted to take that momentum trade, I wouldn't have a problem with it. And just go with the market, right? Because your setups always rule everything. Okay, so that's sort of Bitcoin. Altcoins, I've been doing a little bit of business here and there, doing a little bit of nibbling on some names. Not really seeing anything that's really making me overly impressed. This one was mentioned in the, I don't know whether it was just in the class, in the Telegram group. The guys were hunting M's and W's. And we've been talking about this recently. Threw in a stink bid off of the line in the sand, our little shark setup after the double bottom. And you can really see that the market sure is interested in this level. Frankly speaking, I don't know if it's going to hold. We now have an M working here. I'll tell you what, though, if the market does hold this level and turn back up through here, that is a powerful bottom. But way too early to tell whether this is going to hold. And of course, it's a trader's life, right? I mean, this is a trader's life. If you're leverage margin trading and these lows fail to hold and you took a shark setup, you better get the hung out of there. You know, you got to follow your plan. If you wanted to wait for a nice polite setup, it's interesting how can everybody see we have a nice little fractal, little inside bar trying to set up off of this candle here. Way too early, you have to wait for the candle to finish in the next candle. But maybe we're getting a nice little market signal right off of that level as well. But something I took a little nibble on yesterday. Also, again, and hopefully this, you know, is probably just broken record kind of talk. Double bottom, line in the sand, was building a position into this over time, so I took another little nibble off of here. I thought I saw a fractal come in here, and then I noticed the day that I actually pulled the trigger that the market crapped out and busted my little fractal here. So there's no real, this thing's going up, we got to load up, right, pound the table. It's just sort of more like nibbles. I really like the bottom end of this range. Could we see lower lows? Sure, I mean, this is trading. Again, same message as before, and this is why I like line in the sand trades. If we break these lows, leverage margin, large size trades, you better get the heck out of there. All right, taking shots, a little old lady style. My hunch is, to be honest, I bet you we do something like this for the next while, right? And then when the market's ready to go, woohoo! So I don't mind little old lady style just nibbling in half decent trade locations. But again, nibbles, right? Do not put yourself into a position where you can't come back and play the game tomorrow. Our good old Bella, we were feeling pretty good. Never did hit stop to break even. So now we're back basically sitting at scratch on the trade, right where we entered. But no signal to do anything here. Still risking against these lows. Just a big hurry up and do nothing. And our Litecoin. This is a funny trade, but really par for the course in a trader's life. We had the move stop to break even level hit. Really cute little setup, really. Boom. Then quick run up to move stop to trailing. And this is sort of where, if there's going to be any discretion coming into trading, I can live with people having some discretion here. Am I going to use ATR to exit the trade? Am I going to use a moving average? Am I going to use candles? There's a few reasons where you could have justified saying, you know what, Brian, I've had enough, I'm gone. In my recent conversations, I've been suggesting that I was going to use market structure to tell me when to get out. And so as a result, I didn't really do anything through last night. In the lounge, I even posted damn, off of the 1 hour chart, we had quite a pretty little shooting star there. And that set up an inside bar fractal fail. And I was sitting there last night going, well, you know what, should I just hop and get out of here? But I reminded myself that the trading plan that I've been telling you guys, what I said I was going to do was I was going to use market structure to frame these stops. If I want to change that to, I'm going to use candle patterns or a moving average cross or ATR breach to trail the stops, great. But I should have that outlined in the trading plan ahead of time. I don't think it's a good idea, and I don't want to, trying to be a demonstrator of best practices. I don't want to be hypocritical here and be jumping from reason to reason to reason. I told you guys before I was going to use market structure to frame the risk. We've had the move stop to trailing level hit. So everybody should fully understand if we breach this low, guess who's going to be gone from this trade? Does that make sense? Does everybody understand that I'm going to use market structure now? And if this low now is taken out, I'm out of there. Make sense? Pretty straightforward. And this is what I mean by we're going to have to, if you are a trader and you're going to use trading models, you got to respect the model's rules. And this is Brian's model. I'm not saying, for no time am I saying everybody here at TRI must trade the bot. I'm not saying that at all. In fact, if you don't want to trade the bot, I've had a few people that when we were in strongly trending markets, they're like, oh, the bot's awesome. And then we go into a sideways consolidation market and they're like, oh, fucking bot sucks, man, never again. So I'm not here telling you, hey, you got to trade the bot. But what I am saying is if you do trade the bot, you have to respect the fact that we're not always going to go up to that AB equals CD. And in this case, this would just be simple 1-to-1. I'm just going to walk away with a nice little profit for my time and effort. Thank you very much. All right, so Ian has already built trading rules into his plan as to when he can consider taking the bot. And that's what we all need to evolve to. If you read Ian's comment in the text box, is that we all have to actually get to the point where we personally own the setups. And you've paper traded them enough. Ian's just taken 0.01 BTC into these trades, and he's having a great old time, having just a blast trading away. Very, very low anxiety, convincing his subconscious of the validity of this information. Once you go through that process, then you can start upping the bets. And it sounds to me like Ian will never risk more than 0.01 BTC, which is perfectly fine. If he doesn't want it, he doesn't have to. He's making great money just having a blast trading away. Okay, so that's sort of my comment about current trades that I have on. I don't really have anything that's really rocking and rolling right now. I did see a couple names that kind of perked my attention. And FYI, everybody, I don't have it on here now. The gold trade itself, I do like owning gold in here, and I've wanted to. We have 5/6 of our desired position on. The only one that was left over was we were going to work a shark setup after a double bottom was confirmed, and we got this order working here. So I might be buying a bit more gold here before the day is done. Who knows? Okay, a couple names that look kind of fun that I saw, and I talked earlier about fundamental drivers. Oh, cool, look at that, it's right there. So heard a lot of chatter in the lounge about Dash. People are getting interested in Dash again. Can everybody see and this one's marginal, right? And this is where, you as a maturation of as a trader have to simply decide, well, it's gone beyond the 66, but do I have enough structure here to believe that there's some sort of reason to get long? What are my indicators telling me? Is money actually flowing into this story? We just did volume yesterday, Monday and today for the Europeans. So, when I look at something like this, does everybody see the AB? At the very least, does everybody see the potential AB equals CD? Right? I mean, that's the very minimal. Whether you take the trade or not, that's up to you. But hopefully, can everybody see the AB equals CD? Right? So, and you can see that the market is very interested in setting up a trade off of this level. There's no doubt about that. And I look down at my indicators and I see that they're all validating that, hey, there's something going on here. And I got 1 low, 2 lows, 3 lows, 4 lows, 5 lows, 6 lows to defend my long if I risk against this level. So, you know, I saw it, and then of course the fundamental news, I think it makes sense what's going on here. And here, if anything, this is the type of market where we have to really concentrate on those fundamental drivers. Seriously, guys, find the fundamental stories. They're the ones that are going to be hopping. And so, you know, there was another one we were chatting about in the lounge this morning. This crazy one, they're doing the whole Twitter pump thing and everything, but can you see it in the charts? Can you see the W in the OBV? Can you see the W in MACD? Can you see the W in price? I'm not saying for a moment this is a buy, because keep in mind I'm long from like down here. But what we should understand, if you wake up and you see VOX running, well, it should make sense why. You know, they are right now, they're fundamentally flooding the market. So it's just, if anything, it's a good anecdote again of this idea that the story, the fundamental driver, we should see it reflected in price, and let the two work in conjunction to set up the trade. If anything, you know, VOX is an interesting story unto itself. So it shouldn't surprise us that this kind of craziness is going on here. I can't justify playing this. But, you know, something like the Dash, that Dash chart, and I think to a certain degree that Litecoin setup was sort of driven by like a fundamental shift in that Charlie coming back onto the story there, right? So the Dash, from what I understand, there's some sort of big promotion or something going on. It makes sense. Let the fundamental story drive the technical picture. Does that make sense what I'm saying, guys? Try and combine the two. Why is this chart looking the way it is? Right? That's what rational analysis is all about. Yeah, thank you, Casey. Okay, so we got about 10 minutes left here. Let's maybe just go take a quick boo at some names you guys wanted me to look at before we head off into the sunset. What do you think, guys? Did anybody get any value out of today's daily brief? Did you enjoy the conversation? Is this, am I doing you guys a favor with these daily briefs? I don't know. I want to, you know, please, 76.8. Well, not 78.6? Come on. DBs are so awesome. Okay. I mean, I'm not here. I don't want to, you know, this isn't some sort of ego, oh, Brian, we love it, blah, blah, blah. This is your opportunity to give me direct feedback as to whether this is even worth your while or not. Because if it isn't worth your while and I'm just wasting everybody's time, I won't do this. Right. All right. Does anybody remember where we left off yesterday? I remember we did a long talk on CPC. AGRS, we've been talking about that a lot lately. STR, XRP, I seem to remember we looked at those. ION, that one just recently ran, didn't it? ION. You guys all made a ton of money on this. You just want to rub it in my face. Oh, well, it's sort of midstream. If anything, everybody should look at this chart and say, well, I know exactly where Brian wants us to be long, right? Everybody see the W? Down, up, down. And then you could even break this apart, right? This is an hourly chart. Wow. So can everybody see the cute little W's down in here? Jeez, pretty little chart. Figures James would know about this. Oh, look at this in Joby. Do you see what they did here? This is one of Joby's favorite trades. It's not really the best example of a doji, but sort of doji gap. And then just took off like a rocket there, right? So, you know, beautiful trade area right down in here. This is where you wanted to be long. all in this neighborhood here. So the problem is, are we anywhere near there now? It's a bit too expensive. If anything, you know, this looks like Joby Gap. That's right. Yeah, this looks like Vox, right? I can't buy it here. There might be a fundamental story that's driving it, but you know, right for the present, I can't be a buyer here. Let's put on the whole spiel. Or is it? No, it's not that. It's there we go. Cute little momentum turn here, little dabo. So it's getting a momentum push. I suppose maybe there might even be a little bot in here, but and wow, check this out. You see this gap right up here? That's probably where it's going. So James, I reckon you probably could pay off that farm with this trade right here. There's still that much more profit to go, but I couldn't buy it here. James, are you here? Oh, he's not even here. Bastard. All right, let's move on. Oh, a whole bunch of stocks. ENRG. Well, let's look at ENRG first. ENRG. Boom. Maybe. Do, 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 do. No, that didn't work. F5. All right. Woo, look at that. Ah. What a mess. What the hell's going on here? Jesus. Good old crypto. Oh, yeah, that makes sense. I mean, if I'm not mistaken, I think I'm long from like down here. You know, go look on the site in the crypto page. Hopefully everybody can see. Oh, I can see exactly where, especially this right here, right? This sort of defines exactly where you should be long. Really, probably gotta go like that. And like that. There we go. That. All right, so I really wouldn't have a problem sort of accumulation strategies anywhere at or below this level here. So not a big surprise coming back down into these bottoms. Can everybody see the W? And actually, this is a really good example of venture cap, the way that venture cap will often lose this 78.6, but ultimately down the road, can everybody see how the market's set up off of that level? And the recapture of the 78.6, the line in the sand, this is why I like to call it the line in the sand, is that desperately the bulls, if this thing is still a bull, it will desperately try to hold on to this level. Right? So this is a really good example of deep, deep, deep correction. And ultimately, it had to use the 78.6 as sort of its pivot. Yeah, okay, I'm back. I'm really a bull. And then, of course, if we go down here to here, off of the double bottom, and actually that's a pretty wide double bottom, look at this shark trade, right there. So now you got 78.6 and 78.6. This is Brian goes, you know, like Homer, right there. That's like the trade. So we go back and we see where we are now. Can you guys see how we're nowhere near? And this is what worries me about this space. Is, you know, people are bidding these prices up, but at some point we're going to come back down to these lows, and then we do the whole damn thing all over again. Do you all see how dangerous this market is now? Does anybody see it? Yeah. Well, and what was good old Uncle Brian doing the whole damn way up? Selling, 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 selling. We just got some insane fills on this one. It's ridiculous. And the worst part about it is, you know what I think this was right here? I mean, if you had orders to sell, great. But I think this bar here was guys who did buy up here that were never supposed to have bought, they covered their butts on this bar here. Something looks very, very suspicious about this. Opened up here and just cratered. What the hell is going on here? All right, something just does not smell right there. Now, the interesting thing is, you know, if you were interested in trading this, I don't mind you taking a shot off of the bottom of this gap. Does everybody see the W? Right there. And the market gaps higher and it comes back down and it fills in the gap. Talk about a sick trade. You see that right there? And the irony of it all is that this trade was actually already set up. There's the original W. You think we could have done a shark setup off of this? Right, would you have had the balls to go and buy this level here and take this heat, take this heat, take this heat, and woohoo! What do you think? Could anybody do that? Do you think anybody here could handle this kind of pressure? You know, this is why Hogue says, you know, we are, as traders, we are paid to worry. Technically, these lows never were breached, but they came damn close, didn't they? What do you think, guys? I mean, this is, if anything, this is an excellent anecdote of a trader's life. Oh, God, 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 oh, God. Woohoo, I'm rich! Dallas is gone. Dallas Chris Dallas there just went, oh, that's it. I can't handle this. I'm out of here. Anyway. Oh, look at that. People are dropping out right, left, and center. All right. So, you know, a trader's life, I don't really mind if you've got the time and energy and patience to be hunting these kind of gap fills to try and take a stab off of that. I would highly, highly, highly recommend that you little old lady this kind of stuff. Like Ian will go and throw, like, if I'm not mistaken, 0.01 BTC. And let's just see what happens, right? And he might make 0.02, 0.03, 0.05 BTC. Who knows, right? Just out of this insanity. But he's concentrating on the risk-first approach. The absolute worst that cannot possibly happen to him is he's going to lose 0.01 BTC, BFD, right? Okay, so that's kind of a fun one to look at. It is the top of the hour, so I think what I'll do is, why don't we take a look at somebody's, Roham's asking us to look at Adobe. So why don't we finish off with a nice stock to send you on your way. Everything's just sitting here, right? Parked like a rented mule. I don't have its chart. Oh, I got. Let's go here. All right. A, D, B, E, boosh. All right. Oh boy, that looks a bit nosebleedy. Hopefully, you know, when people look at this chart, the first thing that jumps out of them is they should be able to see where the market structure is. And hopefully everybody can see this W. So this was like an old trading range, and then they put in this tighter W, and then there's this even tighter W here, right? And, you know, we actually see this on a lot of crypto, right, where they really coil, 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 coil. And in this case, the coil resolved bullishly. Everybody sort of see that consolidation? And if anything, as traders, this is what we have to wait for, is you have to wait for the consolidation. And then our trade develops on the resolution of the consolidation. Does it make sense that guys like Mountain Man and the range traders, they're going to be taking their shots off the bottom end of the range here, right? Right in there. Shark, we didn't really have a double bottom to work with, but can you see how the gap, right, if you had just worked your bid at the gap, which this so happens to be the shark level, Yeah, you had to take a heat a couple days in there, but on balance, that wasn't that bad of a trade idea. Hey, what do you think? Does that make sense? Ian, do you see how you can take this skill and head right on over to the stock market and kill the stock market too? Ian's going to go and buy 1 share of Adobe Systems. No, there's no problem in that logic. If it works, if it ain't broke, don't fix it. 1 broiler chicken. That's right. So, not me? No, not me. A broiler chickens. Yeah, sure. Hey, you could have. I'll give you a million broiler chickens. Anything. When we were kids, I used to say, yeah, and thank you, Benjamin. one milla BTC or 1 million won. That's right. A bunch of won. Hey, now you guys are getting me off topic. Stop talking. All right, so looking at this chart now, we can clearly see where you should have been interested if you were a buyer. Does everybody see that? It's pretty as plain as day. If you were a Adobe bull, you know exactly where you were supposed to be long from. Make sense? Anybody? Who asked about Adobe? And all you guys are going, I couldn't give a rat's ass about Adobe. And is technically that swearing? I think you can say ass now on TV, so I don't think that's technically swearing. But do you notice when we do our fib from the high to the low end of the range, gee whiz, look where the reload zone is. Are you guys kind of seeing that chart was photoshopped? Are you guys kind of seeing a little bit of repetitiveness here? Consistency in the message, right? The irony of it all, it doesn't matter whether it's crypto, whether it's Adobe Systems, or whether it's broiler chickens, it all has to align with this stuff. So it really shouldn't surprise us that the original market structure, what we call for the level 2ers a horizontal support and resistance, is nestled nicely in the reload zone of just simply the range that we've identified now. Shouldn't shock us. If anything, you know, we talk about the pending recession. The stock market always breaks first, and usually, you know, the stock market, when it, you know, percentage-wise, what does an asset have to lose percentage-wise for them to, the public to call crash, oh, the end of the world, all that kind of stuff? Any ideas? There's, well, no, not really. It's usually about 20%. Usually, have you guys ever heard the expression, a bear market starts at 20% correction? That makes sense? Anybody ever heard that before? So, if you hadn't and you got your journals out, I think we just found something I didn't know before. So what does 20% actually look like here? If we, you know, let's say we'll use this as a measure, $141. Well, so that means that's about, what, about 30 bucks, $28? So 141 minus 28 takes us down to about 120 or so, right? What is that? That's 21. We got to go even more, 28, right? So do you see how, yeah, there you go. So you see how it says 29%. So can you see that what's going to end up happening here is this thing's going to break. It's going to dump. It's going to come back into its reload zone. But do you see how the public is going to be told that the stock market is crashing? You can almost like literally see the future. And this is where us technicians, right, kind of like me getting all upset about the public getting all orgy and having fancy cocktail parties in Chicago and everybody patting themselves on the back about how wonderful investors they are buying Bitcoins at the top of the market. It drives you crazy. This is the same sort of thing. Is that as technicians, we know where we're supposed to have bought this asset. And we also know that when they dump the market, they're just going to dump it right back into exactly where the bottom is. And the public is going to be spoon-fed. And those people that were all, patting themselves on the back about what great investors they were, and this is the same crap on Bitcoin, right? They were all in love with themselves up here, but a shitload of Bitcoin, right? All that kind of stuff. When we get down here, where we know, if we look at just simple reload zones, this is where we're supposed to be buyers. What do you think the public's going to be thinking at the same time? Right? They're not going to be buying a shitload of Bitcoins, are they? They're going to be selling a shitload of Bitcoins, aren't they? There really is no difference here. That's the shocking part about this. So somebody who's asking me about Adobe, my hunch is, and I heard other people say, well, probably we should be watching on things like 38.2s. My hunch is that that's basically what's going on now, right? You can see these big dips. Can you see how there's like a floor being established here? And if anything, what this actually tells me is that in a weird sort of way, we can actually kind of hypothesize about where the top is. Because these levels are obviously pretty important. 38.2 likes to be traded to. Do you see how what we could do is we could actually take our fib tool and drag it up so that 38.2 lines up with that. Now that actually gives us an upside target of $151. Does that make sense? A little different way for you to think about price and how we can use the fib tools going forward. If we do come back to that original market structure, cute little gap, big old gaps here, gaps, right? The failure, if it happens to look maybe something like this, right? Up, down, up, right? Maybe the fail doesn't come there, but actually comes there, right? Which produces a 25% correction. Sky's falling, it's a stock market crash, capitalism is over. But what you don't realize is you're just playing into the institution's hands. Does that make sense? Some food for thought there. All right, could I buy Adobe right here? No. I mean, I suppose, if you're day trading, looking at lower time frames, keep in mind this is a 4-hour chart, right? What does it look like on the daily chart? I'm almost afraid. Right, so we did all of our analysis off of here, right? I suppose one could argue we really should be going off of that low. Oh boy, this is getting scary. Oh goodness. So, there is that reload zone that we were talking about now off of there, which is just simply a play back into this reload zone. Isn't that interesting? Because I think Ian even said that, hey, I want to hunt these overlapping reload zones. So now we have 61.8 off of the higher time frames, lines up with 78.6. Anyway, you shake it here. What do you think, guys? Would I ever tell anybody, hey, Adobe Systems, this is a pretty low risk buy here? What do you think? Probably not, eh? I would be like, you're awfully late to the party. If you want to be a buyer, good old hunt reload zones, wait for range consolidations, maybe look at your momentum indicators at these points. If they're starting to put in W's, maybe even divergences, then start hunting structure to get long. When we're up here, awfully tough. I suppose, for the traders amongst us, if you were like down on a 1 hour, maybe, if we start coming in against these levels here and start showing signs of turning, maybe you can hunt setups off here. But it doesn't even look to me like the big boys even want the public doing that, right? These violent spikes down. Public, you're not invited. Public, you're not invited, right? So I don't know. You're awfully late to the party. I think there's better fish to fry out there in the world. I did see a reference to the weekly chart, and I should shut up because I've got a class to teach here in 45 minutes. I just keep going on and on and on and on. All right, so if we look at this weekly chart, nice base in here. I actually kind of like that. Again, if we think market structure, there's a nice W right in there. I actually, I like this level in here. Nice little tail. So that's going to be far down the road. There's no hurry for me to even think about spending money here. Okay, I think I'm going to leave the daily brief at that. I hope you guys enjoyed the presentation. Brian, blah, 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 blah. But hopefully I gave you a nugget or two of wisdom there. As I had said sort of previously, I'm kind of thinking that Bitcoin's in sort of a holding pattern now for the next week or so. I'm not looking for any major fireworks today or tomorrow. But I definitely think that we're building towards some sort of finish to this correction. So. Okay, you have yourselves an awesome rest of your day, everybody. I'll see all the Europeans in about 45 minutes. All the best, and bye for now.